Shelli, here we are for another segment. We've covered a lot of stuff so far. So I thought the next one we could do would be what characteristics make up a quality insurance carrier. I know we touched on that a little bit in some of the previous segments, but maybe we could start by talking about the difference between an admitted or versus a non-admitted or a surplus lines carrier. Do a little deeper dive on that for everybody.
Sure. Okay, so admitted or preferred, we kind of refer to it, means that that carrier is licensed in our state and has been qualified basically by our insurance commissioner. And that's the same in each state.
Mike Kreidler's happy with their status in our state.
So they've, screened them financially sound. They've approved their forms that they use, their coverage forms, and they can't alter those forms. So once they apply for forms, those are the forms they use, and they're consistent, which for us as agents and brokers is a dream come true because we don't have to worry about finding that one little word that's been changed secretly in there. So they're guaranteed. We know what we've got. It's much easier to work with that. And the pricing is always going to be less. Admitted companies are like the ones you would normally think about: CNA, Liberty Mutual, Western National, companies names you recognize. Okay. When you get into the surplus lines companies, those are companies that aren't licensed to do business in our state. And they do that by design because they want the flexibility, which it sometimes can be a benefit to the client. Sometimes you have a risk where you need something specific done that doesn't fit within an admitted carrier. But more often than not, you're in a surplus lines company because you're a high hazard or you've had bad losses so you don't qualify anymore, something like that. So you're now in the bad pool versus the good pool.
But sometimes I want to keep my business going and try to right the ship. I need them for a while, and hopefully I get back in the other pool someday.
Yeah.
Okay.
And like I said, there are advantages sometimes to using the surplus lines carriers. But if we do that, we have to do a due diligence form as the agent saying that we've been declined by non-admitted carriers first, because we are supposed to use an admitted carrier in our state before we go to a surplus lines carrier.
Oh, interesting.
Yeah.
Okay.
Even if it's more, we're supposed to write it with the admitted carrier unless the surplus lines carrier offers some advantage that the admitted carrier can't, which oftentimes can be like a large deductible where, the admitted carriers aren't allowed to go that high, things like that, they offer something we can't get here.
Interesting. Can carriers enter and leave the Washington state market basically whenever they want to, or are there any rules or guidelines around that they need to follow?
The surplus lines carriers can, because they are not licensed to do business in our state in the first place.
So they're just deciding when they decide, hey, we're going to go to Washington and write some business.
Right. And they're for-profit companies. So they can decide to not write a certain type of business at any time they want to. They can just make an underwriting decision. Contractors aren't profitable and we're not going to write them anymore. There's no law against that. They have stockholders and people that they're responsible to. So that and their reinsurers can dictate if they have a poor performance in a certain area in a year, they can say, no, you can't do that anymore.
So it sounds like it's a little different maybe for the admitted carriers.
Yeah, the admitted carriers is a little bit different. All of them report in financially to AM Best, and that's where they look at the reserves and pools and things of money that they have set aside. So it's not all as simple as, but the individual lines of coverage, they can definitely decide to do it or not do it just based upon their performance.
So if my carrier pulls out of the market, does that mean I'm just stuck? I cannot renew my policy?
Yep. If they decide they're not renewing them, then, again, they're for profit. So, it's like an auto repair shop decides they don't want to do brake work anymore because they've had claims, then they can just decide they don't do brakes anymore, right?
Okay.
Yeah.
Okay. So I thought we could wrap up this segment on a topic that you mentioned the other day, which was reserves and potentially the games that maybe carriers can play, pushing those around.
Right. Absolutely. Okay. So they're for-profit companies. And everything is about their balance sheet. So imagine being able to set aside money and you say, I'm going to save this money aside for claims. So that's what a reserve stands for. When you see that on a claim report, that reserve is money that they have set aside. It's shown as debt, basically, on their balance sheet, for lack of a better way to explain it. They can't use it for anything else because it's reserved, and that you can manipulate a balance sheet that way. What kind of an advantage that would be. So they will intentionally leave open reserves. Now, the other side of that as well is that each year when you renew your insurance, one of the factors that plays into, there's 7 factors on your liability insurance that come into play. And one of them is your loss history, your loss experience. Okay. So if you have an open reserve, Open claims and open reserves absolutely destroy you. They count against you so heavy. You can have one claim and it'll hurt you, exponentially for years. It's just not fair, right? The way it works. So those reserves and an open claim means they can charge you much higher rates as well. So as the broker and as a client, you want to make sure that all of your claims that have been finalized are actually closed, because I find them all the time. It'll be, maybe it was closed right after they renewed and it'll come to renewal next year. It's still showing on their loss history as an open claim, or with reserve still. It's been settled. So that's our job, is that we get that history. And pretty much anybody that has any kind of claim activity will find things that need to be closed. And agents all the time just don't do that. And so their clients are getting charged more money because they're not paying attention.
Gotcha. It's good stuff. Thanks for sharing with us on the insurance carrier market.